Nifty does not smack of any price capitulation. We are not far away from an all-time high. So if you have a view on the Nifty, well, it does not look like a bear market. It does not feel like a bear market. But outside the Nifty, it's a problem. The lower you go, greater is the pain. But is the pain getting over? Are we in for a V-shaped recovery, or are we in for a longish winter, which is a time-wise correction? Is it time to really take that risk, or do not take that risk because there is uncertainty whether it's local or global, and good companies have not exactly become cheap? Let's discuss all that and much more with Sanjay Dutt, Director with Quantum Securities. Sanjay, fantastic to have you back, and thank you for joining us. So far, Sanjay, markets have not really rewarded your bullish conviction. Do you think this time around patience will play out and your bullish conviction will be finally rewarded?
Yeah, Nukunj, obviously I would start the conversation with the caveat that I've been wrong for the last few months, and I can be wrong again today. But, that's what taking calls are about. You'll get them wrong, you'll get them right, but you must have your hypothesis correct as to why you are basing your calls. But forget the gyan. The reality is that there's a lot of pain in the system. I think this is one of the worst phases that I've seen in the last 2.5 decades in the markets, where the way the second tier or the third tier of the market was completely decimated, even good quality stocks. And what we are seeing is a structural change. I'm not in the economy, but I'm structural change in the way people look at the markets, the way the people look at stocks and companies. That's what actually is the adjustment that's happening right now, which is in terms of balance sheets, corporate governance, debt. So that's the pain we've gone through. So a lot of people might give reasons that, economy is in bad shape, global situation, etc., etc. But what India is going through is more of a India-centric issue than got to do with anything else. It's a cleansing process that's going on in the market, and we've all caught in the middle of that, basically. But I think more or less it's in the price, to cut a long story short. So I don't think there's going to be any more damage. Yes, it may be a little bit of a painful sideways kind of a phase we may go through for a few months, but I think we are more or less there. The risk reward is favorable. No one can obviously call the bottom.
Are you of the view that the risk reward is favorable? Either stocks have become cheap, or you think markets are misjudging the earnings potential? What is your thought when you say markets are positive? Where is optimism stemming from? I'm just curious.
Like I spoke, I think a few weeks back with you, Aisha and Tanveer, I think my basic hypothesis, my basic positive outlook ahead is based on the fact that we will see much lower cost of capital as we go ahead. And history has taught us, we've seen globally, that single most important thing for consumption, economy, companies to turn around is when cost of capital collapses. And there again we are seeing a structural shift. Gone are the days of those higher interest rates. Cost of capital, just like it's across the world, we will start moving in that direction. Our linkages to bond yields, our linkages to which RBI is now aggressively pushing, as we've observed in the last few days, that everything that a borrower really gets is to be linked to the banks, MCLR, etc., and the repo rate. So those kind of adjustments that we are seeing are once again structural changing in the financing system. Bad people will not get credit ratings of no relevance anymore. People are going to get very serious about who they lend to, where the money goes to, and then obviously once money goes to good quality assets, cost will come down. So my hypothesis is primarily based on the fact that for consumption, for production, for everything, cost of capital is going to substantially collapse. Government is working tirelessly on a lot of fronts to ease out the bottlenecks. In fact, if you look back on what the finance minister said last weekend, 90% of our announcements were focused on ease of business for Indians, not ease of foreigners, ease of business for Indians, whether it's got to do with GST, whether it had to do with refunds. Obviously, we can debate ad nauseum how the implementation and action takes place, but you can clearly make out the focus. And that's what I think makes me optimistic about the next year or two ahead.
Sanjay, let's talk about the broader markets. There's an expectation that now, of course, with the latest stimulus measures, we'll start to see a pickup there, revival in sentiment. Do you see opportunity? They've been beaten and out now for a while. And if you do, where do you see opportunity? Is this the right time to start picking up some of those names?
Oh yes, absolutely, Ranveer. I think there's a good amount of opportunity in a lot of cyclicals. My top bet at this point in time would be something like cement, because I think once again infrastructure, construction, those projects, spending housing projects is what government is going to focus on. That's one sector which is the highest employment generator in India also. So linked to that, building materials, these all the ones who've been beaten down in these sectors are the first ones who are going to benefit. Then obviously select consumption plays, because as we see more and more, income coming in the hand, more liquidity improving, consumption plays will start doing better, the ones which have been beaten down, particularly the second rung ones, the Daburs, the Maricos and those kind of likes, may not be the Nestlés which are all already, at the upper end of the range. They'll also go up, yes, but there may be better opportunities elsewhere. So, I think select financials, good quality financials which have been beaten down because of, the market related issues, systemic related issues, they will get sorted out. We can't do without NBFCs. Select NBFCs where you think there is strength, where you think you have conviction. Those will be good opportunities. So there are opportunities across the entire spectrum but these are 3-4 areas which I think you should start with your shopping basket. Slowly keep adding.
Aviation has been a long favorite amongst many market men, and now that the pool has shrunk to just 2 names, Sanjay, with the promoter sparring, there's an AGM, and anticipation is really building high as to what are the 2 promoters really going to say. Is there going to be any truce or not? Do you believe that there is merit in sticking by with any of the aviation names? I mean, these are quasi-consumption plays. Crude is under control. But yes, there is this overhang of the promoter spat at Interglobe at least.
See, personally, I feel sectors which are generally plagued by regulatory issues, they're generally plagued by 90% of the input costs not being in their control. In this case, fixed costs in aviation, turbine fuel, etc. I normally tend to stay from these sectors because there are substantial regulatory issues, government levies and charges, airport charges, all those kind of things, substantial fixed costs, absolutely no assets in these businesses. So something has potential, but it's not my cup of tea. So I think at this point of time, market has many more opportunities to offer you. Of course, I wouldn't want to comment on what's happening in the largest aviation company in terms of promoter issues. They'll get sorted out. It's a good company. I think they'll get sorted out. But as a sector per se, I'm not too comfortable with it for the reasons I mentioned. I think there are better options available if you really want to play consumption plays and which are less regulated, less government intervention.
Sanjay, has the time come to now start nibbling into the beaten down auto spaces? There have been SOPs handed out by the government, which the finance minister announced on Friday. Most of these stocks have lifted off from their 52-week lows as well. With the onset of festive season, there is anticipation and, of course, a low base effect as well into play that the numbers would look a lot better when it comes to the monthly sales data. Would you take a relook at all?
Yes, very selectively, and the one which I have my eyes on right now is Maruti. I don't own it, but I think it's worth looking at on a bad day or at the right level. In fact, you can start nibbling at it, because I think that's one company which has the ability to really transition its model to the new realities, whether it's the BS norms or whether it's the EVs. That's one company which has got the scale, size and everything in the country to actually be able to transition fastest to the new realities. It's corrected substantially, phenomenal brand, common people's trust, one of the top brands in the country, dealer franchise is phenomenal. So I think that it's a good time to pick up something like a Maruti. So auto, yes, but extremely selective. I can only really think of one name, which I think at this point of time one should start looking at and keep nibbling and adding. I really can't. I don't have much of confidence in any other names right now.
Everyone said the reason why markets are falling is not because of slowdown. It is falling because of this tax, which was called draconian. It was called, unfair for foreign institutional investors. Guess what? The tax is gone. But FIs who had gone in the month of July and August, they've not made a comeback.
Nikuj, I don't think the markets really went down because of the tax issue. We were plagued with economy problems, we were plagued with corporate sector problems and bank problems for a while now. That was probably the last straw on a camel's back, which kind of really soured the sentiment. Because people had a lot of expectations after election. That was the first budget after the phenomenal mandate Prime Minister Modi got. People thought lots of things would come in, and in fact, on the contrary, these one or two negatives came in. So one can't really attribute the massive correction in the market because of that. In fact, it probably only magnified it. The inherent problem has been the issues that the economy has been facing, both what I mentioned, the structural issues in the market, and also some cyclical slowdown which we're seeing in the economy as a whole. So combination of two really peaked out with the negatives in the budget, and we saw this sudden collapse and kind of throwing in the towel. But I'm glad that government has addressed this FPI issue because it was an unfair kind of decision. It probably should have been taken with a lot of debate and consensus amongst all people. But what makes me very positive is the government listened, the government beyond that has gone and now addressed it. And it really clearly shows government's intent of being open for business to everyone, Indians, foreigners, etc. And I think much more will come out of it than the damage that was done or perceived to be done in July with the budget.
Start buying beta in your portfolio, Sanjay. When I say beta in a portfolio, start buying risk.
Yeah, I think that's a function of investor psyche and individual investor profile. Someone like me would, as they say in Hindi, start taking pangas right now. But a conservative, passive investor should probably not focus on beta as yet. Would just try and ensure that, stable preservation of capital is the right portfolio strategy, stable earnings ahead. Maybe it's a little early to really for a passive investor or a lay investor to start playing beta. But some of us, probably born punters in the system, would at this point of time start and taking some bets. But overall, I wouldn't advise investors who are not totally clued on to the system or not really disciplined in terms of stop loss and those kind of things to start playing beta as yet. It's too early, really.
The market, Sanjay, into two: value plus expensive. Where do you think markets are not able to recognize the value of the business and sentiment has dragged it down? And where do you think in this fall also you should not buy those stocks because earnings will disappoint and those stocks will keep on getting derated? Like Yes Bank. I mean, a classic case where when it fell from 200 to 300, everyone thought it's a buy. That 300 has become 60 and everyone's got trapped.
I would just have 2-3 filters for a lay investor to look at value right now. Look at sub $100-200 million companies, good brands which having across sectors, whether good reputation across sectors, low debt. These three factors. If you find anything that's sub 1,500 crores, 2,000 crores market cap, not more than say probably 3,000 crore enterprise value, 2,500 crore top line, and a good name, clean balance sheet. It's very important to read annual reports and understand the pitfalls, read some research report. There's so much available on the net for people to understand. That's where I think value lies right now. So something that's trading below sales or one-time sales, EV, has been profitable last 3-4 years, even in such bad times, or not lost money. Those are the places to go and have substantial market share in their businesses. You can find a large number of good quality mid caps in the definition I'm putting, 1,500, 2,000 crores market cap, 1,000 odd crores debt, 500, 7,000 crores debt, so 3,000 crores EV. This is the broad benchmark, and I'll be happy if some investors were to go and since all your shows are available on the net after it gets over, go and rewind these and kind of understand these basics. Even I have lost substantial money, so no one needs to worry. I've lost substantial amount of money in this whole market mayhem because basic rules we all threw out. If you go and fine-tune these basic rules again and again, cut the noise from television channels and media, and do this basic homework. If you're a direct portfolio investor, direct secondary market investor, you will make this money. Discipline yourself. I admit, and I'd say it again and again, no one has to be worried about losses. We all made losses. None of us are gurus out here. We've all got slammed very badly. But rebuild portfolios, rebuild things. Bad times come and go, but money will again be made in equities. There's no second thought about it.
Thank you for joining us this morning, Sanjay. Always good talking to you, and thanks for being so frank with us this morning.
Thank you.
And like you said, times keep changing, so let's hope that we are headed for something better in the next couple of quarters.